The market follows our plan perfectly as we look to buy the dip for another winning trade. This is Invest with Jacob. So in Tuesday's video, I told you that the market should top around 43.92 SPX before pulling back in wave 2. The market topped at 43.92 SPX before pulling back in wave 2. This is the power of Elliott Wave, guys. It gives us measurable, accurate targets that we can build profitable trades around. And I'm going to show you a couple more examples of that today. Now, I'll get into that in just one second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, and I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. Okay, guys, so as I mentioned, we hit the top exactly on the number at 43.92, and then we started our pullback in wave 2. Now, there are some other instances, if you go back in my videos and look, back in early May or late April, when we were around 3,800, I have a video titled 4,400 on deck. I knew we were headed to 4,400 based on the Elliott Wave pattern. Everyone else was calling for us to top around 4,000 and have a massive pullback. That did not happen. And to me, there was no reasonable reason for us to think we were topping. We had a target of 4,400, and we are almost there at this point. We are experiencing a small pullback now, where we're looking to buy the dip and target between 44.40 and 44.80, depending on where this wave 2 bottoms. Another example is, I didn't have the channel back then, but when we hit the COVID lows, one, I was expecting the COVID crash before COVID ever existed because of Elliott Wave, and when we hit the low in COVID and everybody said we were going to 1,500, I said we were going to 4,000 because of Elliott Wave Theory, and here we are well over 4,000. So to that end, Elliott Wave continues to prove to me that it is the most accurate form of technical analysis out there, and it's really not close. There are many experts out there who, with no data to present, love to call for tops or big crashes or all these different things and show no actionable path of how to get there. I show you measurable wave counts and what our targets are, and we continue to hit them over and over. Okay, guys, enough of my rant about Elliott Wave and how awesome it is. Let's get into the chart and take a look at what happened today. Okay, guys, here we are on the 5-minute futures chart. And the reason we're in the futures again is because the wave 4 happened overnight on Sunday, so it's really hard to see on the SPX, and this makes it cleaner for you guys to see what the wave counts are and where we're headed and why. Just remember to add about 10 points to any target on here to get your SPX target. Okay, we got the top of our wave 5 Tuesday, 43.84 on the futures, 43.92 on the SPX, which is exactly where we called for it. And then we started our wave 2 pullback. Now we're looking to buy the dip here because this 5-wave pattern up only completed wave 1. Remember, Elliott waves are fractals, meaning these 5 waves make up this one wave. Okay, then we'll get our pullback in wave 2 here. Should be targeting around 43.40 on the ES or 43.50 on SPX. And then from there, we should bounce and target 44.40 to 43.80, depending on where this bottom is. And I'll show you that in just one second. So we didn't buy the dip today down here because there's no clean C wave here. If you look over here at this ABC correction, this is a clean C wave. You see this big long wave down like this? This is what C waves look like. Here you've got this first wave down, which is probably the A wave. That's what we're thinking. And now we're thinking this is the B wave bounce up. Okay, should target around 43.70 on the ES. And then from there, all right, we get the B wave bounce, or the bull trap as they call it. From there, we get the C wave down, which is the long straight line down towards about 43.43. Now, this will cause some panic because all of these C waves always do. They come down so fast, people get scared. But C waves are the most violent corrective wave, and they're supposed to look pretty straight down like a waterfall. Okay, so that's what we're looking for. Since I didn't get a clean C wave today, we decided not to buy yet and wait to see if we get our full pullback, which we should, off this B wave bounce up to about 43.70 and then down to this 38.2 fib. Now, assuming that all happens as we expect, that gives us a target above of about 44.60 or 70 on the SPX. Now let's take a look at how I got that target. All right, we take our trend-based fib extension tool. Okay, we click at the bottom of wave 1 down here. Then we measure all the way to the top of wave 1 up here where the 5 is because it's the 5th wave of 1. And then down to the 382, which is where we're expecting this pullback to bottom. Okay, and then we should target the 1.0 extension first, which is about 44.50 or so on the ES. And that means it's going to be about 44.60 or so on the SPX. So that's how we get measurable targets. And you'll be surprised, as we saw yesterday at 43.92 as the top of wave 5, how accurate these targets are. So we should come up and tag this fib. That's our first target. But wave threes typically target a little higher up here at 1236, 1237, or 1272. So that could give us a target as high as 4480, 4485, somewhere in that range on the SPX. So that's what we're looking for tomorrow, is the completion of the pullback so we can buy around 4450 on the SPX. And then once we buy that pullback, we're looking for a target of 4460 to 4480 on the SPX. Now, one person in the chat room did say, hey, to play devil's advocate, what's our downside risk? And that's a great question. So our downside risk is this. This low down here at 43.7925 on the ES is of the utmost importance. As long as we stay above this low, pressure remains up. If we break this low, it opens the door to a very big correction down towards about 4,200, maybe 41.95 in that region before we head higher from there. I'm not going to take the time to break down the scenario now because it's a much less likely scenario. As we pull back, if we continue to break these levels, then we will address this low and the pattern that we're looking at that would take us down to around 4,200. Okay, so if this is confusing for you guys, if you're new to Elliott Wave and you're not sure what's going on, something that will help you out, I just put out a video called The Big Picture. Okay, I'll link it right here above. Click on that and watch that video. It will help you understand these wave counts a lot better, understand where we are in the big picture of the stock market, okay? And it'll make it easier to see how these waves interact with each other. Guys, if you want winning trades and you want more information like this and real-time market updates, you need to get in my Facebook group. There's a link down in the description. Go ahead and click that link and you'll find a link to my Slack channel, which is just a free chat channel. And I'm on there all day during market hours, giving market updates, answering questions. I put out our buy and sell alerts. It's a great group of traders. We'd love to have you in there. So go ahead and click that Facebook link down below. The only thing you have to do, the only qualifier, I won't let you into my Facebook group unless you subscribe to this channel. So hit that subscribe button as well. Get in my Facebook group, guys. We'd love to have you in there, and let's make some money together. All right, guys, the key takeaways for today is we're watching for this to continue either sideways and down or up and then down. The target up for the B wave is 4270 on the ES, and then targeting back down to 4343 on the ES or 4350 on the SPX. From there, we're looking to buy that dip, targeting 4460 to 4480 on the SPX over the next couple weeks. All right, guys, that is the market update for today. I will talk to you tomorrow.